Alright, fellow traders, welcome once again to my channel where trading is made easy. This part of the video is actually for beginners who don't know at least who are not familiar with the forex markets. And today I just want to show some few things to you about buying and selling in the forex market. I've already explained the meaning of buy. To buy in the market means you are expecting price to go up. Yeah, but let's take it like if you have a currency and you want to exchange it for another currency, what you're actually doing is you are giving your money out, you are selling your money to them, and you are buying this. So if you have dollars and you want euro, you sell your dollars to them, then you buy the euro. But if we're able to keep the euro for a very long time and maybe with time, the rate between them goes up and you are selling the euro, it means you are going to get more dollars. Yeah. So just to make it simple, when you come to the graph, it's very simple. If you are buying, let me delete this. Once you are buying, it means you are expecting price to go up. So this is the current price. Here is the current price. We have two lines. So once, if I want to predict that this market will go up, the only option that will let the system know is to use the buy option. Once I click on the buy, I'm telling the system that I am expecting this to go up. And if it goes against me, I'm in loss. Yes. And if I use a sell means I'm expecting this price to go down. It means if it goes the opposite direction too, I'm in loss. All right. But before I go on, I just want you to take a critical look at the balance and the equity. So you can see the difference here and also the margin. If you have watched the previous video, I explained the margin. And also we have free margin here. This is something new, but at least it is the same as the what you have here minus your balance is giving you the free margin. Okay. So for you to actually indicate whether the price will go up or down, mostly we have this new order. Once you click on this new order, yes, you have this window. So you can see that we have both sell and the buy. And also here we have different orders in the market. But for now, I'm limiting myself to the market order because I'm just explaining one or two things to you. With time, you get to know what to do. So I have already explained lot size. You can see that we have lot here. So for the lot, you see that 0.25, I have another window popping. It is telling me if I put in 0.25, the pip value is what? $1. I've already explained pips. Yes, I've already explained pips in my last video. That is the points, the distance in points, percentage in points between two prices. If you don't understand, you can also watch that particular video. But I'm sure at the end of this video too, you get to know more about it. So if I put $1 here, it is telling me it is now $10, one pip. That's small point. Once price move, let's say this is 1.34082 if it moves to 0.84 or let's say 8, just some 1 point down or up, that is the cost of it. It means the higher your loss size, the higher will be the amount you either lose or you win based on the number of pips that price will go. All right, so I just want to use this opportunity for you to know the meaning of the loss side because I've already explained that one too in my last video. So for now, if I want to sell, I just want to sell, I can just click sell here, then I click place. The stop loss here actually will tell the market. You see the stop loss. If I click on the sell here, I'm expecting the market to go down. So this is it, like this. Once I drag, I can have the value. At the same time, you can also, let's say I want my stop loss to be around 1.3440, which means I'll just place in here 1.3440 here to be my stop loss. And it is telling me if I lose, if it goes against me and it goes to 1.344, I'm risking $387 in this trade if I use one lot size. Okay, let's change to 0.5. If I use 0.5, the same position, I'm risking 168. So here I can just 0.2. So I'm risking only $67 out of from my account. The same way, maybe I just want to, when price gets to this line 1.3380, because I'm saying price should go down, which is the sell, that is the take profit, like this. So I'll just type in this price. If price it should get here, at least they should give me the money that I want and exit me from the market. So 1.3380 is around this, and they are telling me if price gets to that point, I'm getting $52.2. And of course, once you are losing more than what you are getting, it means this trade is not good, because in the long run it wouldn't help. But no, because for the sake of this video, I'll just click place order just to indicate. So you can see that now I have my 0.2 here. They are telling me when I lose, as I mentioned, 69 points, and when I win to, I'm getting 50.6. Now I'm already in loss. I've not, the price is still above my price line where I bought. So once it's above, it means it is within the range, like against my direction. But once it crosses, then it will start reading positive here. Yeah, and you can see that now this balance and the equity are not the same. This is 49.68, this is 47.48, because they've deducted the two, this amount, the net from this place, and it's giving me the equity. So the equity actually refers to the amount you always, your current amount after placing all your trades. So whenever I close this particular trade, it will just set the equity to be equal to the balance. All right, so the same thing, like the same analogy applies with the buy too. Once you hit on the buy, maybe I click new order and you use the buy, you can set your stop losses. So you just click place order, then the buy too will come. So you can see that here too, the buy is there. Yeah. So with the buy, that is the green part. When I click on this, I can move the stop loss to here. Because I'm buying, the negative side is the downside. And because I'm expecting price to go up, it means my profit will actually be going up like this. So you can use this format to also place a trade. All right, so the margin, the margin, as I explained in the last video, what the broker requires me to at least to have before I can place this trades. So if now the total margin is 26.81. If I close any of the trade like this, any of them, this margin is a combined, like the amount they expect me from these two trades. So if I close any of them, you see that the margin will reduce. At least here is 26.81. They're expecting me to at least have $26.81 before I can execute or place a trade with this lot size, the 0.2. If my money is less than that, they will not allow me to place a trade with this lot size. If it is less, That is when it goes beyond it, they will just come with they will just explain the that is when price goes below it. You see that you'll be having messages like margin call. It means your margin is getting out of hand. You are going below it. But right now I have my balance is too much. So they will just tax the use from the balance or the equity. Then the result will be the free margin, which means if I want to place this trade, they will be using this particular side to execute me in the market. But if the margin here is 0, I cannot place any other trade unless I wait. So they are telling me the free margin is equal to equity minus the margin use, if you can see it. All right. And the next thing is for lot size calculation. Sometimes what I do is I use here, if I want to buy, you just use this option. So we have the risk to reward, we have the buy, risk to reward, and the sell. So if you want to buy, I can just click on the risk to reward, the buy here, just click here like this. And here the green part shows my direction of trade. So the green part is telling me my profit. That is the profit side, and the red part is if I'm losing. And trading, anytime you are placing a trade, you have to think of what you lose. Because the losing part, just think about how much you are risking. So if you have $1,000, this one was 5,000, and I'm losing only $500 out of it. It means though I'm losing 100 out of though it's money, but I'm not feeling it. You can't just place all your money in it. That is why we have this one here. So with this particular tool, the importance of it is it just gives you, it just does the calculation for you. You know, you want to, the here is price, the here is the current price. You are expecting price to go up from this point. So, okay, if it goes against you, I want it to be here, this particular place. It means I'm predicting the price should go up, but once it goes against me, when it hits this line, this price, once it hits this, it should take me out and give the system $100. Okay, but if it goes in my favor, it will just go around this side, and at least when it hits this, it will give you $174.98, which is good. So that is the buy. Once I click the buy, you see that it will place me in the system and it will start activating. And the important thing about this one, it just gives you the risk to reward ratio 1.75. It means if you measure the distance in pips from here to here, that is the distance, 64.8. And from here to here, the distance, that is 67.1. You can see that this one is, here is twice of this, almost twice. But that is approximately 1.75. Yes. And it is telling you whatever trade you are going in, the amount that you are risking. If you are risking $100, you are gaining 1.75 of the $100, which is 174.98. That is it. So this is for the buy. Once you click on this one, you don't have to worry about the lot size. You just have to know what the amount you'll be losing. The system will just calculate the lot size for you. Just check. If I drag this up, you see that the lot size will be updating. Maybe I want when the trade goes against me and it gets to this direction, they should just take me out. They should just take me out. And still I'm risking $100, but because I've reduced the distance, the pips, now the lot size has increased to 0.38, but my reward tool has also increased to 246.27. And using these two, the pips are also calculated. That is it. That is why I was saying in my previous video that you don't have to worry about the pips. And also, one other thing is if you want to sell the same thing, so sell, I just click on this and just drag it around this section. Yeah, so I'll just drag it here. Maybe if to sell means you are expecting price to come down, I'm expecting price to come to this direction below here. So all this range is my profit target, and this red part is my loss part. Okay, this time 249.17, and here is $100. You can also reduce it just to increase the lot size. See the 0.31. Now my profit is 367. And if I want to place the trade, even if I want to use here and place it, by looking at this, I'll just type 0.31 here. You understand? And I'll just click, because I'm using the sell, I'll just click sell, then I'll just click place order, and it will trigger my trade in the market. All right, so I in fact, I love using this particular tool, and it is very easy. And with this, you can also just so I can right click on it, click settings, then you change the amount that you lose. So let's say I want to raise $500 for each trade, and I click OK. You see that here has been updated to 500. They are giving me two lot size, just to make my thing simple. So if even I drag it here, from here to here, I'm still raising $500, but it has reduced it to 0.83 because the pips now is too much, and my profit, once I'm losing that $500, now my profit is 984.82, which is also good. All right, I hope this video is clear and you've learned a lot. I will end this particular video here. If you have any comments, if you want to share anything with me, or just subscribe and comment at the comment section to boost our morale. Let me know your problem so that I can address it in the next video. Thank you.